The end of an eventful day. This is the closing bell at the New York Stock Exchange. You know that sound. The Dow Jones closed the day flat at about 50 points, and the S&P 500 and NASDAQ ended the day also relatively flat. Tim Pagliara joins us now. He's the Chief Investment Officer at CapWealth. Tim, it's good to see you on this day where all we can talk about is banking. I won't even ask you what was driving the market, but what was the impact, if any, of the acquisition of First Republic Bank or its failure?
Well, good afternoon. I think the market was just digesting the information. There's still a lot we don't know about the terms that JP Morgan negotiated in, the takeover. So more of that will come out in the days ahead.
And First Republic is just the third bank to fail in 2 months. We know, Jamie Dimon has said that he hopes this will stabilize the banking industry. How do you see this playing out? Do you think it will?
I think that this will stabilize the first part of the problem in the banking industry, and that's the asset liability mismatch that they have in their retained portfolios. There's been enough of a decline in rates and enough time for the banks to really start the process of cleaning all that up. The bigger concern is what Charlie Munger sounded the alarm bells about is, 2 years out when a lot of the major commercial real estate has to be refinanced, and the change in values and the recognition of all those problems, that will be the next focus as we build momentum into the end of the year.
But on today's conversation, there had been so many efforts going into trying to save First Republic, and clearly that did not work. We keep talking about the difference between regional banks versus larger banks. Can customers still have faith in smaller institutions?
Oh, I think they can. And I wouldn't have called First Republic a small institution. I think it was, had a lot of things that made it unique. So you just have to kind of watch and see how this unfolds. It's always the things you don't know that really catch you off guard in situations like this. The biggest thing being, depositors move billions and billions of dollars in a nanosecond out of all these banks that have failed. So we've never experienced that. And so that's something new, and it's something that banks are going to have to plan for on their balance sheets.
Yeah, the bank run. Now, the Federal Reserve is on track now this week to just hike interest rates for a 10th time, I think it's by this point, on Wednesday. What are you expecting?
I'm expecting them to do what they said they were going to do and hike rates another 1/4%. The market believes that the economy will slow down fast enough and that they will hit their inflation targets quickly enough that they'll be able to start dropping rates towards the end of the year. I'm in the camp of wait and see. I don't think inflation is going to subside because of the labor situation. And I don't think the Fed is going to be as accommodating as people want towards the end of the year.
Well, we'll wait and see. We'll follow your lead. Tim, thank you.
Thank you.